Hi, what's up guys? Welcome to part 5 of the economics model bootcamp. This video is just going to be about liquidity, right? Liquidity is the base of the market, and I just want to explain how I use liquidity, what liquidity actually is, and why you need to use it. And honestly, it could have been the first video in this series, but it wasn't. So, leave my signature on the chart. Alright, let's just get into this shit. What is liquidity? Liquidity is basically a point where there's going to be stop losses. So, for example, this would be the ultimate buy-side liquidity or all-time highs. And the thing is that price is drawn to people's stop losses, right? Because the algorithms want to stop people out because institutions are going to take positions at people's stop losses, right? Because they need to fill their orders, because institutions are placing such big orders that they need traders' stop losses to fill their orders. So let's hop down to like the 15-minute time frame and let's just explain something, right? So what would have been like today's best liquidity, right? We leave this low, it's turn on sessions. The best liquidity levels that we're going to use is going to be session lows and highs. So for example, here we have London low, London high, Asia high. Asia gets swept. You could see Asia high gets swept, and we dump. We dump to Asia lows. Cool. So what do we have coming into AM? We have previous day high above, and we have London low below. So what happens? We come down and we sweep out these stop losses that are at London low. Because if you look at the chart, right, people that got into, say they bought the dip right here, they bought it, their stop loss is going to be at this low. And what is institutions going to do? They're going to drive price down to their stop losses so they can fill their orders down here to push the market higher. Cool. So how can we identify the best liquidity? Like I said, it's going to be mostly session highs and lows. You can see constantly London highs and London lows gets reaction off of. Boom. And how can we identify a real liquidity sweep? That's going to be the most important thing, right? What I preach most is turtle soup. So you can see, boom, 15-minute turtle soup is like my favorite confluence when it comes to identifying real liquidity sweeps. So you can see today it happened, 15-minute low, 15-minute London low gets swept, turtle soup, boom, 15-minute high, turtle soup. We have this, London low, gets turtle souped. Yeah, for this example, London low got closed on the 15-minute, then we continue lower. This one, we have London low get left. We close through London high, and we continue higher. Boom, we close through London high, we continue higher. Obviously, it's going to be turtle soup on different time frames. Like the 5-minute is going to look different than the 15-minute. The hourly is going to look different from the 15-minute, but you know what I mean. So, like right here, Asia low gets turtle souped, and then we come up and trade higher. Right here, we have London high gets closed through on the 15-minute, then we continue higher. We have an Asia low turtle soup down here. We have Asia high getting turtle soup right there, and then this low during Asia session getting turtle soup there to go higher. But basically the entire point behind liquidity is people's stop losses, and institutions are going to place their orders so that they can get filled and then take price the opposite direction. So how can we use that is, you've probably heard this a million times, liquidity sweep and then a break of structure. Which is going to tie into OTE that's going to be the basis of the model that I'm going to teach at the end of this series. But that's basically it behind liquidity. That's kind of it. There's external liquidity and there's internal liquidity. So you're looking at the market. What would be external liquidity? External liquidity would be, say, this swing high that we put in when we're trading higher because we're in an uptrend right here. Boom. uptrend. Boom. So now we're going to pull back to internal liquidity. Boom. To trade back to external liquidity. So like on a smaller basis, you could look at like this. We're going to trade to internal liquidity to trade back to the external liquidity. What is that internal liquidity? It's going to be a 1 hour imbalance. In this case, boom, this internal liquidity gets hit, and then we continue higher. But yeah, I mean, honestly, liquidity is pretty simple. Just using session highs and lows and like major swing points. When you're looking at the 1 minute chart, you'll get a lot of noise. Like you may try to use like you could try to use like this as a liquidity sweep, but if you just literally look over, there's a Lennon low right below it. So like say you tried to take this long after we got the OTE, like you would have just got fried. Like you could have obviously taken it and then like this, but you would have lost. That's because you had a session low right below. You had all these stop losses right below. That's the whole point behind like a stop raid. And the best part about liquidity is that when you pair it with time and AMD, which is going to be in future episodes, you will absolutely print, because the 4 hour time frame is always going external to internal. You can look like right here, we sweep external and then we rebalance these internal lows, all these stacked up internal lows. Now we're going to probably trade higher. That would be the goal of the market. Unless we do want to trade lower, then it would be something like this. We sweep these, dude, what is that? We sweep these lows, then we come up and rebalance inside like this hourly time frame. Boom, rebalance up here to trade lower. Would be more like that. But yeah, that's pretty much it for liquidity. It's a simple concept. Just use session lows, session highs. Don't look at 1 minute liquidity. Make sure you're sitting on the 5 or the 15 minute time frame when you're marking out your real liquidity. And just know that the market moves external to internal. And yeah, pretty much it. I'll catch you guys in the next episode of the bootcamp, and have a good one.